Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to give you my financial opinions across the board. If you need any help with anything, check out finding-value.com. We do have discount in the coupon code if you want a discount on daily or the monthly membership and a larger discount on the yearly membership. So let's dive in here. Let's take a look and see what's going on with the DXY. DXY is heading lower. It has come and kind of broken out of this rising wedge. It's been basically just leaking off slowly to the downside for the dollar. So let's look at yields because yields are generally what are driving behind the dollar. And it's not an easy read here. So on the short end of the curve, on the 2-year, it does look like we could go slightly lower to sideways on the 2-year. The 2-year and the Fed funds rate mimic each other. They're very close. And basically what people say is whatever the 2-year yield does is basically what the Federal Reserve will do. It just follows it. It's a little puppy. This does look like it could potentially go lower, which means the short end of the curve could head lower while the long end of the curve still looks pretty resilient, and I'll show you what that looks like next. And that would be the yield curve uninverting, or if that were to happen. And I don't know if we're there yet. Looking at the 10-year, this is coming back, but we're coming back into strength of support. So we hit our head, broke out, and a lot of times you get a return move, and then you get a launch to the upside. So yes, in the short term, it's pulling back. I don't know if this is going to be, this isn't like a topping pattern that's just going to go all the way down. I don't think that's the case. We're going to have to wait and see what occurs down here at about the 4.5%, 4.4% range and see if we get some support there then and a launch to the upside. The 30-year also, again, we got that strong support area. We kind of held underneath it, broke out. We usually do a retest, and then we break to the upside again. Why is this so important? It's important because yields determine the pricing of assets. And if the 10-year yield and the long end of the curve looks like it could go higher, I would position differently than if this 10-year were to drop and go down. And I know a lot of people are in the recession camp. I get it. And we can see that we've got some selling pressure here, and we have a bearish engulfing on the weekly here where we could go lower. But we've got support underneath us too. So again, we'll see where this thing goes. Maybe it comes back here to the 3.5% range, and a larger problem is on our hands. Maybe. I don't know. Some people call it a demand destruction event, whatever it is. We also have, looks like here, this is a end of trend move, the projected move. If we were to project it higher, is quite a bit higher than where we are today. So our projection has not been met of the inverted head and shoulders there. And do we still have more upside? And this is just a small little pullback. Difficult to say. But if you were to put me on one side of the camp, I would say that yields are probably going to go higher after this little downward move. That's my guess. But again, we have to see that. Downward and then the bounce on up. That's my guess. TYX TNX ratio is inverting again. So we're coming back down. We are inverting the curve again. The long end fell faster than the short end. TLT moving on up. We're getting some support in TLT. Is that where all that money printing came from? All the deficits? I don't know. Maybe they're trying to support the market here. Tough to say. And this is the 2 and 10. You can see it. Uninverting comes down, but we are heading in the opposite direction here. It's heading back up. Is this going to be temporary? I don't know. We're going to have to wait and see over the next few months how this is going to play out. And the pricing of this during these transitions, it can be difficult to know exactly where it is. So we're going to have to dive in and dig in to the individual companies' charts to see what they're saying for us. So gold heading higher today. Actually looks pretty good, but we're underneath this resistance trend line, and we're underneath this resistance trend line. So we're underneath everything. We got to break back above that to get moving, and we haven't done that yet. Silver also moving on up, but again, we've got a lot of resistance ahead of us. Are we going to come up, tag it, and then roll back over? Again, we're going to have to wait and see. If yields were clear that they were going to uninvert, then I would say gold and silver going higher. But they're not clear. We're moving sideways. So everything is not clear. We're kind of in this transitional period, and we could see things move sideways for a while. Platinum also moving up. This actually looks pretty good. Nice, good bullish engulfing day where we could head higher. But again, we'll see. Palladium just moving sideways for palladium. And I do think we could go sideways to slightly lower. XEU to gold ratio, it is firming up today, which is a good thing, up 1.3%. We're back up against this resistance area. We got a long way to go, guys. We're getting some support here. We got to break out through that. There's some resistance ahead of us to break through that. That's the need to break this line for happiness. We haven't broken that yet. And I think the markets are waiting for that market condition to come where we break on up. And it might be a little bit, so just be patient. CRB index down a little bit today. Crude oil down. So we could still have some sideways motion. If you kind of back out, does this look like a shoulder, head, shoulder that could develop where we get more of a pullback down here? It is possible. And we're seeing that in some of the charts. But again, it's not confirmed. Maybe we have a little bit larger pullback to here. Maybe yields do fall and gold and silver do go up in the short term. Once we get that retest, and then we just rip it. But again, that's not I don't know if that's necessarily going to happen. Let's continue to dive into these charts and keep looking. CRB to S&P, it's still pulling back. Looks like we could pull back even further. We've got some pretty strong movement in this ratio as of right now. And maybe we've got a final washout where we come back before heading higher. Why do I keep saying we're going to go higher? Inflation. Inflation's going to come. And they're going to do QE. They're going to have to print more money because liquidity is going to dry up in the system. It's going to cause a slowdown, perhaps. And then it's up to a man-made, a person making a decision or a group of people making a decision of when they're going to reflate it. Because they can't allow it to crash, in my opinion. So that's kind of what we're waiting for. And maybe we head back a little bit further before that occurs. We've got GDX up a good amount, still below a lot of the resistance that's out there, though. We're still below a lot of that blue resistance line. GDXJ moving up, and there's your support trend line on a monthly. SILJ still below a lot of this resistance. So we want to see if we're going to bounce back and turn, or if we're going to break through it. We're not there yet. Crude oil down 2.5%. I mean, if this was really going to hit it, we should have closed more towards the bottom there. But we do have a little bit of a wick. Maybe we're just going to kind of trampoline jump a little bit, work off some of this downward momentum on top of support, which is that $82 range, 82-ish, and then work our way on up. So again, let's continue to look at data, continue to look at more charts to see how this is going to play out. But that's what it looks like at the current moment. This is the other fractal that we have. Are we going to get one last kind of move lower before heading up? It is possible. I'm not denying that. TTF gas down today, but again, we've broken out, got a little bit of a pullback today. Again, let's wait and see where we go here. It doesn't look that bad. So this is what it looks like, kind of zooming in on it. Now, this very well could be, a pattern that's developing, and perhaps it's something like that, like a flag pattern that's basing out here. So again, let's wait and see what this comes out and how it kind of plays out. That's on the 5-minute chart. We're zoomed way in here. We back out. You can barely see that candle there, the drawing I put. Natural gas, still just moving sideways, not much selling pressure at the moment. We've broken out of this resistance line. A lot of the times what happens, you break out first, you might get a little bit of a return move, or just a sideways move, and then a resumption. That's known as a flag pattern. So if we were to kind of dive in, it's a pattern where you go sideways. You can see we kind of false breakout down here, and then we could slingshot back to the upside. So that's what I'm seeing there in nat gas. Still looks very good. And there's the fractal from last bull market, that blue fractal. XOP, yeah, you know me, couldn't leave you hanging, guys. I know you like hearing that. XOP is just underneath this neckline. That's all it is. It's just underneath it. We hit our head, came back. Hit our head, came back less. Hit our head, came back less. So we're stepping up into that resistance line. And I do think that we're going to break this at some point. And I think that when this breaks, I think yields are going to go up. So in the short term, yields are going down, gold's going up. I get it. But if you take a bigger picture view, it's possible that we get yields to pull back to that support level on the 10-year, 30-year. Then they start to run back up, and then I think this will go back up. And oil and yields are tied together. So it's just a calming period before another rip to the upside. So I like XOP. I think OIH is doing the same thing. Nice little bullish engulfing today. That usually works its way on up. So we've been in this channel, working our way to the upside. At some point, I think we're going to break out of this thing. And when we break out of it, that's when the fun begins, guys. When the fun begins, that's when the refresh button on the portfolio is going to be used a lot, because you're going to be like, wow, it keeps going up. Hopefully. Sproutville's Uranium Trust down a little bit today, 1.7%. Is this thing ready to launch to the upside? Are we putting in this type of consolidation? I don't know. We're going to have to wait and see. It looks good the way I drew it, but again, we have to see if it stays in there or if we break to the upside or down. URA, gather more information. This is a bearish engulfing, but we continue to get wicks on the bottom here. So there's buyers down here. That's why we have a bullish engulfing and we have wicks on the bottom. So people are buying it up in this general area off this, we'll call it, that's not a trend line. But we do have a bearish engulfing here and we have one here. That generally means that we could head lower. Is there a final washout move that comes back down to here or something? Very well could. So, and we're seeing it across the board. Another bearish engulfing here on URNM. That generally indicates that we could potentially head lower. There is buying pressure here as we have a bullish engulfing and wicks. So it's your guess on what you want to do on where this is going to go here. If I were to make a guess, I would be conservative and say, it might go a little bit lower. But we're going to have to wait and see. And it's across the board. But we're getting wicks on the bottom here. There is buying pressure there. So it's not a clear-cut answer. Again, basically what happens, and we're zoomed in here just to show you guys. We came on down, we got bought back up. Come back down, we got bought back up. And what it's basically creating is here, let me draw this a lot better instead of being all nasty. We are creating a wedge, right? I don't know which way this is going to break, but if you were to look at it historically, if you're coming from the downside, it consolidates sideways and then breaks back down, which is a possibility. We also have kind of a shoulder, a head, and a shoulder that's there. And we could break to the downside one last time before heading higher. So I'm not here to pee in your Wheaties or anything like that, guys. And I want to see where this goes. It's an interesting setup. But that is a possibility. TAN also is heading higher, 1.3%. It's up a little bit, and we're bouncing off this support level. COPX down a little bit, but still in the channel. We're in the channel, guys. Lithium down a little bit, right up against resistance. That resistance is that line going across here, this trend line. We're right underneath it. REMX also looks like we're up against that resistance line. And we're just underneath that trend line that I've created here. We got to get back up into that channel. SPX looks like they got their boys buying the SPX somehow. Again, this is bouncing upward, but we're below this trend line. Is this going to come down, come back, and then head back? It's very well possible. And remember the yields that I'm talking about, how this is all interconnected. The yields have been going down in the short term, and this has been going up. But I have a feeling that we're going to get somewhere up here, and it's going to reverse and go ahead and head lower. Yields are going to go back up. What does that mean? It means that it's going to be headwind for the S&P 500 and the NASDAQ. And I think oil is going to head on higher again. That's my guess. Energy in general. But in the short term, we could have a counter move before that happens. NASDAQ also doing the same thing. We're below trend line here. We're coming back up, and I don't think we're going to break through it. I think it's going to roll over at some point. But we'll see. KRE holding on, just moving sideways for the regional banks. Still looks good in my opinion. Until it doesn't. Emerging markets looking good. We've had weaker yields, a little bit weaker dollar. Yes, this is going to go up, but again, we're going to see what yields do over the next few weeks. XHB up, weaker yields, weaker dollar, and this is working its way to the upside in the short term. We are in an expansionary phase of real estate still. This does look like a bullish engulfing and wants to go higher on the weeklies, but again, we'll see what happens. MU heading a little bit lower today, down 0.55. This is the agribusiness ETF. Could it come down here? Yes, it could. Down at $69. 69. But in the short term, looks okay. Copper. Where are you going, copper? We're sitting below this kind of trend line down here. We've got kind of a steep trend line on both of them. And we're sitting underneath it. We haven't broken back above. They're not huge selling pressure candlesticks outside of this one here. Diversified mining companies are just in their patterns moving sideways. So everything's moving sideways. It's not a clear direction of which way this is going yet. Well, let's keep that as an unclear direction. Iron ore, we've broken that to the upside on this falling wedge. I still think this is going to work its way on up because we're sitting on top. Plus, if you look, there's not much selling pressure here. It's not like it's just getting sold nonstop. It's kind of a slow leak off of selling, and then it's a breakout. It's probably going to maybe come back to this level here, possibly, and then rip. That's my guess. So that's iron ore. Nickel, again, this almost is like it's managed and controlled by JP Morgan, who said they were going to control nickel. Again, I wouldn't jump in front of this yet. No reversal candlesticks yet. Aluminum, up a little bit. It's just sitting there going sideways at the current time. So we've got support right where we're at. Baltic Dry Index down 0.4%, but I think we're going to head higher. Still looks good for the Baltic Dry Index. Newcastle coal moving sideways, but again, I think nat gas, oil, and coal, I think are all going to move higher with interest rates. After interest rates and this stuff kind of all pulls back, and we're right there at what I consider to be a really good location to be looking at potential coal companies. This is your base down here. You've broken out the base. This is your retest move, and generally you will work your way up from there. So, yeah, I think coal companies probably don't look too bad. And we might bounce around here for a little bit to base out. Bitcoin down 2.5%. A little bit more selling pressure there. Again, this looks more like the NASDAQ and the S&P 500. This is your resistance line. We broke to the downside. It comes up, and then sometimes you get slammed back down. I think interest rates may do that. So Bitcoin there and Ethereum's got the same type of setup. There's your trend line. broken out on pretty solid selling pressure, and it's only gone sideways. It hasn't really made much headway to the upside. So I'm bearish on Ethereum and Bitcoin in the short term, and a lot of other stuff. So that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel here on findingvalue.com. Finding Value Finance. That's what I meant to say. So liquidity is drying up to some extent, but there's still stimulus to some extent as well in the system because we are running massive deficits. And it's trying to counteract. So I think there is some liquidity drying up in certain areas. Other areas, the liquidity may still be in there. I know the M2 money supply has contracted, but velocity of money is also way up. They counteract each other. So we have not been declining. If you look here, we'll do it right real quick at the end here. M2, so this is M2 money supply. I know some people are talking about this, and we've had a little bit of a decline. You can see a little bit of a bounce there, had a decline in it. People are worried about that. But if you take M2 money supply, this is basically GDP, multiply it by money velocity, which is M2V, you can see that we're continuing to head on up, even though that M2 money supply kind of rolled over to some extent. So it's not, I don't know if Steve Hanke is right with the M2 money supply. Maybe I'll ask him to come on the channel, and maybe I'll ask him that specific question. But yeah, that's what we've got in the markets right now. Watch yields. That's where we want to see. Watch those yields. That's what's pricing all this stuff. That's what's causing the rotation of money to fling all around. An unstable 10-year yield it means unstable markets. It's going to go all over the place. So get ready for some volatility. The yield curve is going back and forth in terms of inverting and uninverting. We're kind of in a transition period. This is generally where sometimes energy just rips, like it rips really big. That this is where it occurs. It's right, kind of late stage cycle. Sometimes it can even uninvert to some degree, and energy just rips. So we're in that area. We could still see the yield curve invert further. It is possible, and I know some people are calling for recessions and all that stuff, but we'll just have to continue to watch the data and the charts. All right, guys, that's all I've got for today. We'll catch you later. This is Finding Value.